Today's video is all about AQTIS. AQTIS is a next generation DeFi company built on top of AI powered quantitative technology. Guys, today we're going to be doing a deep dive into this project, figuring out whether it has what it takes to make it to our bullish portfolio. Guys, we're going to be looking at some of the fundamentals, the team, the overall tokenomics, and some of the details that can make us fundamentally bullish. So you know what? Let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And of course, today is about AQTIS. Is this an opportunity? Is this a project that we should be scaling into in preparation for the up and coming bull run? Now, of course, guys, today we're going to be doing some of the research that we need to do in order to get fundamentally bullish. We're going to be looking at the value proposition, the tokenomics, the team, the white papers. We'll look over the website. We'll go and see what exactly does this project have, and does it have what it takes to make it into our portfolios. All right, guys, let's use the website as our main platform here. Obviously, it gives us an idea whether this website has what it takes as well to give us the information that we need to give the general public the information they need to get bullish. And we can see that ultimately the website is okay, looks pretty good, you know, nice and engaging. But when you look at the navigation, it is a little bit cumbersome in the sense that it's one page, right? And then you start clicking, scroll down, and you lose track of where you are on the website very, very easily. Although the information is engaging, sometimes the engagement is not the most important. It's clarity. Clarity is key. I critique websites, I critique crypto projects and teams and so on very, very often. And one of the major things that I look at is the ability to demonstrate the information, to relay the information to the general public very easily. And right now, you know, I feel like this website can be simplified and still maintain its engagement value. So AQTIS is a next generation DeFi company built on top of their proprietary AI powered quantitative technology. So it's an AI project, it coupled with DeFi. And to go forward with that, it is basically a AI-powered, let's say, bot. Let's say, in other words, it does trading. It does trading for individuals that hold capital into their liquidity pools, and it allocates capital accordingly. Let's look at this in a little bit more detail. Obviously, I don't want to make it seem simpler than that. Trading software. We're a software company building tools that allow investors to achieve consistent yields, okay, with their LSDs, which is liquid staking derivatives. Okay, if you don't know what those are, I would suggest you do a bit of research. But essentially, if you put any capital into their yield, and it's locked up and staked up, essentially you get liquid tokens that you could use to trade and so on. Okay, so that's one of the hotter narratives in the last little while, maybe a concept that could do very well in the up and coming bull run. So I'm happy to see that they have this aspect intertwined into their value proposition. But also best in its class trading tools and assistants that let you take trading to the next level. So the assistant key is, I'm assuming that, you know, it's the AI aspect of things, right? They want this to be fully integrated, the trading aspect to be fully integrated within AI. Okay, so that's the major value proposition right here that we have. And we're bringing technology typically only available to institutional investors and making it available to everyone. Guys, I've heard this before. There are other DeFi platforms out there that are trying to bring those, instruments, those financial instruments that are only reserved for high net worth individuals or individuals that just have access to these instruments, and they're bringing it to the mainstream. They're bringing it to people like you and I and getting access to it. So let's see what happens here. Ultimately, you know, the AI capabilities are very, very interesting. That is also a very hot topic, a very hot narrative, and it should do very well in the up and coming bull run. So let's continue here. As you can see that we do have a few little dots that we got to get through, and they're nicely labeled. empowering the community, fine. And then we keep on going down. Mission statement: we have an ambitious goal of creating a vibrant ecosystem. The ecosystem currently is a little small. Of course, it's a very small micro cap project. It's out, just came out kind of thing, and it's still doing its thing, trying to build its ecosystem. So we got to understand where it's at, right? Real yield ecosystem. This is important because ultimately, whenever we hear about yields, we get a bit afraid, because we've seen in the past when other DeFi projects have promised, excessive yields, like yields that, you would never dream of, right? Those would be too good to be true scenarios. But what AQTIS is trying to do is bring that back to a bit of a reality and actually earn those yields in a very safe way, reducing risk. So for me, that's important. At the heart of the ecosystem, it is the AQTIS utility, which powers not only the quant technology, but all parts of the ecosystem. So basically what they're trying to do is integrate a token, AQTIS. It is built on the Ethereum network. AQTIS is a token that is going to have a utility, a specific function that basically drives the network. And that the AQTIS token is going to be used in order to use their database. And we'll talk about that in a second, because really what the database is information that it can be basically reached, and it's AI information that can be used in order to do trading. Okay, so we're going to talk about this in a little bit more in a second. And they're about, follow them on Twitter, on Discord, and we'll talk about their socials in a second. So you can see that the navigation of their website is fairly simple based on these little dots here. You can kind of get around that. And down here at the bottom, you have the Twitter, the Discord, the terms, the trade, if you want to go straight on to Uniswap, because at the current moment, that's the only place that you're going to be able to get it. And of course, that's a bit of an issue for me personally as a active trader in crypto. I look for concerns of liquidity, and they're, being only on a DEX, it does have a scenario where what about if I wanted to exit my positions? Do I have the liquidity available there on Uniswap? Contract address, if you want to look into that and dig deeper. I did look into the contract address, and we'll look at that together here as we go through this deep dive. And the Git book. The Git book is basically a white paper, and of course, we'll look at that as well. All right, so these are the main tabs. And if you click up here, you got a couple other tabs. The team, if you want to look into the team, documentation, and trade, again, back to Uniswap. Okay, so let's get right into this. This is basically the documentation, a white paper. What is AQTIS? So it's a DeFi company. At its core, it's DeFi, and it's basically an AI-powered quantitative technology that they've created in order to help them make better trades and ultimately allow individuals to earn yield. So we're a software company building tools that allow investors to achieve consistent yields with our unique LSDs and gain access to best-in-class trading tools and assistance. So that's what they're offering. They're offering a unique tool that can be used on their DeFi platform that is AI-powered. Plain and simple. Okay, so very interesting. And in order to get access, or you basically get access to that AI tool, you need to hold AQTIS tokens. You got to use that, as that's what's going to be the token that is going to be used to drive that transaction. So that's the value proposition behind the token itself. Built on Ethereum, it is a unique piece of technology, sustainable return investments, whatever it is. Why is it smart? Because it's powered by their own customized AI quantitative technology, financial experts. What important? Okay, so basically you can read this on your own, guys. There's a lot of information here. Who is behind it? Unfortunately, the team, guys. The team is not completely doxed. There are some little blurbs about each individual, which we'll look at in a second, but really it's not a doxed team. And there is a trend in seeing very small projects not get fully doxed from the get-go. But still, guys, we want to know who's behind the team. Who are these experts? Are they really experts? And ultimately, a LinkedIn account that shows us some of the historical backgrounds professionally and educationally, it does help, right? So that's one of the aspects that I look for when I'm looking at deep dives, is the team fully doxed. Why did you build AQTIS? Okay, we can look at this in a little bit more detail. Let's get right into some of the more important things. What makes AQTIS different? That's an important thing as well, but feel free. So there's a couple of tokens here that belong to their ecosystem. I think that's an important one. There's the QETH. Okay, so which basically is a liquid token that is based off of Ethereum, so an Ethereum liquid-based token, and again, it allows you to generate yield and so on and so forth. Something else that you might want to look at, because there are a lot of liquid stake token platforms out there. And then there's the QSD, which I wasn't able to really get a confirmed answer to this question. I did ask on the Discord. The Discord was lacking a little bit of engagement. There was nothing really happening there. By the way, the Discord is well created. There's a lot of different channels doing this, doing that. However, guys, when there's no active community, what's the point of having all those channels and then getting lost within the channels? I just wanted a simple question asked, like, is this a stable coin? Like, if you read through the documentation, it does insinuate stability, but is it pegged to the US dollar? Yeah, if you look at the ticker QSD, maybe, I don't know, but at its core, AQTIS and their LSDs are liquid stake derivatives, and basically what they're trying to say, how does a QSD work? And if you look at what QSD is, it's almost like it's a yield-bearing LSD dynamic price yield mechanism. There's a lot of jargon here, but if you keep on reading into it, how does it work? How do I buy? How do I generate yield? And they start talking about the stability. Basically the minting price of QSD is set to $1 per QSD. This is what we're kind of insinuating. It is pegged to the dollar, and perhaps this is the stable coin. And when you talk about DeFi, it's not uncommon to see a DeFi platform have their own stable coin. Okay, so this is really good. The QSD tokens can only be purchased with native ETH or USD derived stable coins. Again, another insinuation. They will receive tokens in the same wallet. Okay, a lot more insinuation there that it is a stable coin. So even though I didn't get my answer my question answered, at least I'm able to get a bit of an idea here. And again, look at all of this information that you can get here with regards to it, some of their other tokens that they have in their ecosystem. So pretty good. If we keep on going, quant tech and AI explained. So they have their AI and their quant tech that they've created. At its core, AQTIS is their quant tech our bespoke AI and machine learning algorithms manage the AQTIS investment portfolio. So think about it as an investment portfolio. Everybody provides liquidity to, and they use AI. They use a proprietary tech to make transactions or to make trades that ultimately should be profitable and provide yield. In this document, they're going to be looking over some of the how it works. And what I really found interesting is a bit of this investment thesis, no strategy. This is it. Okay, so for those of you that know me, I'm a trader. I'm a swing trader. I am a momentum trader. And for me, looking at different strategies, constantly tweaking your strategy is very important, because the market conditions do change. And not only do market conditions change, but the conditions of which a strategy remains profitable also changes, meaning a strategy can go stale because it all depends on how many individuals in the market are using the same strategy. If the strategy becomes too predictable, it becomes easy to manipulate. So you need to keep your strategy on point. You need to keep tweaking your strategy to make sure that it remains profitable. Now, if we're going to rely on AI to do that analysis, so be it. Obviously, I am not a professional in regards to AI, but what I do know is AI still relies on a heavy amount of information, a database of information in order to make its decisions, right? It's not forward thinking. It uses historical data in order to predict the potential scenarios of the future. So what they do have here is three strategies that they employ in their AI mechanism. Mean reversion. Guys, you know that I've talked about mean reversion here on the channel many times. When you see price action run up really high and you see momentum and the average momentum kind of like stagnant, you expect the price to come right back down, almost like pull right back up. And mean reversion can be used with many indicators, whether you use it with the RSI, you use it with the exponential moving average, or any moving average for that matter. Basically, you want to see how the price has deviated from an average, and the likelihood is that it comes back to the average, and then when it gets back to the average, it bounces off the average. This is a viable strategy, guys. It's a very profitable strategy. It's a strategy that many traders use. Now, if we can integrate this strategy into an AI algorithm, guys, it may be a profitable thing as long as the AI is capable of understanding that strategy is not always perfect. And how is it going to react accordingly? A human can react very quickly, but can an AI algorithm do that? Guys, again, I'm no professional in the field, but I do reserve a bit of caution with relying on any artificial intelligence that's not really intelligent. The reality is it uses a database of information. Breakout, entering a long position. You guys know that I absolutely do not like breakout trading. It's because it requires that you buy tops. Ultimately, it requires that you accumulate on the top of a move rather than the bottom of a move, and it becomes a scenario where if you're not using proper risk management, you become exit liquidity. So for me, a breakout strategy, not the greatest, but still very profitable strategy if you employ proper risk management and so on and so forth. So not bad of a scenario as long as it can do its due diligence. And trend following, obviously the trend is your friend. A lot of us use emotion when we trade and not follow the trend. This time is not going to be different. The reality is, statistically speaking, the trend is always your friend until it's not your friend. And the individual, the trader that can identify when the trend is no longer your friend, that is the individual that can probably most likely enter and exit a trade successfully. Okay, so I like this overall strategy. I like what they're trying to achieve here, and integrating an AI bot or an AI scenario here to make those decisive decisions at appropriate times in order to maximize and capitalize on market conditions using the liquidity that the DeFi protocol has on hand, the liquidity, the liquid pools, and so on and so forth. So we're relying on an AI bot to make a yield. That's basically what we're looking at here. Investment thesis. Let's see what else we got here. Why is the machine learning? Why do we use machine learning? You can look at it just a little bit more. Machine learning learns off of historical price action in this case. Very clearly, I can't explain that anymore. Obviously, there's a lot more to it with regards to tech, and we're going to have to rely on the professionals. Read through this thoroughly. If you want to get really fundamentally bullish, you got to really know all these little details behind its text. How we manage risk. Obviously, risk is important. But again, how is the AI bot going to do that? How is the AI going to, trigger some sort of strategy to maintain profitability, even though maybe a trade might be it can't be 100% positive. So there has to be some sort of risk management involved. Quant tech workflow, that's about it. Okay, quant performance, summary, tokenomics. Let's jump into that. There's a lot of details, guys, that you should be getting into if you really want to know a lot more. What is the AQTIS token? So the AQTIS token essentially is this. It is the main ERC20 token. It's a utility-based token on Ethereum with a max supply of 3 billion tokens, which is a lot. Okay, so I almost hesitated there with the B because it's a lot of tokens, but who cares? The reality is it doesn't matter how many tokens. What matters is the utility, and is the utility gonna absorb those tokens? Or do we need that many tokens? And if we don't need that many tokens, the price is gonna stay low, and that's the reality. So it doesn't matter how many we have there in max supply, but what kind of matters is what we have there already in circulation. Approximately 67% are made available currently. 65% were basically made available at launch, at Genesis. So whenever the token was created, 65% was already distributed, 100% of it public launch. So a fair launch, which is great. Great to hear. And a lot of projects that do fair launches feel the no need to make themselves docs. So this is probably one of the reasons why they're not docs, is that when it's a fair launch and the majority of them are already in circulation, there is no real risk of a rug pull. So why do they need to be docs? Still, I understand, but still very necessary. LSD liquidity rewards, 25%, 12-month linear vesting after LSD launch. So as soon as the LSD gets launched, we're going to see a 25% basically LSD liquidity rewards. You're going to get rewarded for providing your liquidity to the pools. And of course, those pools are generally going to be used to yield more value, more trading profit, and so on using these bots. Protocol liquidity, 10%. This is what's necessary for keeping the protocol liquid, meaning on Uniswap or any other exchange or whatever the case may be. This is where the concern is for a trader. If I am up significantly and all of a sudden I have tons of tokens to sell, will I be able to sell them? Is 10% enough? I don't know. And ultimately, will the market be willing to basically provide that volume that I need to, find exit liquidity? That for me is a concern as a trader. Token release, you can see this is all the release schedule. It's fairly linear, and it's fairly clear that there is no main issue here, given the fact that the good portion of them are already released to the public. So good stuff overall tokenomics wise. There's one thing that we have to discuss with regards to tokenomics that is not clearly stated, and it should have been put right here based on what it is and the utility behind the token. Now, I'm going to kind of scrape right through this. Why does AQTIS Oasis? Okay, let's talk about Oasis. We'll put this on pause because I don't want to jump around too much, so that you can follow along with me. Why does they use Oasis? Oasis, if you guys know, is Rose. The ticker is Rose, and it's a privacy layer. So they're using a privacy layer to just basically ensure that people that are involved here on this DeFi platform are getting their privacy and so on. So that's a good thing. Very good thing. What else does it do? Performance-based buyback. So they plan on buying liquidity back. And overall, I don't know what they're going to do with that liquidity. Are they going to use it for marketing? Or because remember, it's a fair launch. How are they going to get things going? How are they going to do marketing? How are they going to get anything going here with regards to even socials or awareness or anything? By the way, their strategy is very unique, right? You can see that even on their socials, which we'll talk about in a second, there's not much hype happening here. And I feel it's because right now at the current moment, they don't have any plan, or maybe they don't have a marketing budget to get some hype into the market, right? So that's an important thing. Are we going to run this thing based on hype or pure value proposition? If it's pure value proposition, expect a slow grind to the upside and a very sustainable price action. Whether if it's on hype, you might get that nice pump, but then expect a potential dump given the fact that you leave a lot of volume below, a lot of volume gap below. Okay, so it might not be a bad strategy, but you can see that based on what's happening here, where's the liquidity, where is the capital in order to invest in marketing and hype and in market interest? That's an important thing. Okay, so let's keep that in mind. Private yield, ecosystem liquidity, insurance ecosystem aggregator, a lot of things happening here. And then they're frequently asked, the roadmap. Let's talk about the roadmap, guys. It wasn't anything very clearly on their website speaking about the roadmap. I think every website should have a page dedicated to its members, its team, its roadmap, and a bit about the tokenomics. You shouldn't have to get into the white paper to get some information here. There should be a light version on the website giving you all this information using graphics and charts and so on and so forth to get you get your feet wet with your research. And then if you want more, you should be able to get into something like this to get those details. So the roadmap so far, they've been doing really well. They do have a graphic right here that kind of shows you their trajectory for the 2024, which I'm happy to see, a nice updated roadmap. Not a lot of projects keep up with that, so that's a very positive thing that the team has a focus in a clear direction. So good on them right there. Feel free to go look at this in a little bit more. Fully private LSD rollout, guys. That's an interesting value proposition for sure. Privacy for me particularly is a big thing, and as we are in the wild west of crypto land, we definitely value our privacy. I do significantly. So this is not bad. Let's see if we can get out of here successfully. There we go. And then you can see that there's the 2023 roadmap if you want to go see what they've been working on, Q1, Q2, and more to come. So that's good. A lot of good information, detailed information with regards to their milestones and dates. That's another thing that I don't really see often is projects being committed to the date or the estimated time of completion. And I understand why, because ultimately if they don't meet their deadline, the price does fluctuate. People start dumping on the market. It starts to look like fear, uncertainty, and doubt. And that volatility is, just basically something that shouldn't happen in this industry, because in software there's always things that happen, and dates don't matter. Ultimately it's execution. Ultimately it's the value proposition at the end of completion. And yes, keeping yourself accountable is very important. So I like the fact that at least they put a date of estimation, which is Very, very good. And last, I'm still looking for the last thing that I want to, it might be in the frequently asked questions, and it has to do with the tokenomics. Overall tokenomics, overall right here, you can get a lot. What is liquid staking tokens? If you want to know about that, the quant trading, of course, the AI bot does the trading, and it uses the AQTIS token in order to access that information to basically just basically access the information on their database. Let's see, quant trading right here. If I click that, massive sophisticated algorithms, okay, science-backed approach, okay, a lot of little information. Why permissionless exits? How much does it cost to buy and sell AQTIS tokens? Here we go. Here we go. So there is a tax, guys. It was 5%. Now it's down to 4%. And the tax is totally fine in this instance. Why? Because it is a fair launch, and you got to ask yourself, if they don't hold any liquidity, how are they earning? How are they earning anything in order to run this project? Who is going to be the individuals behind this project that are going to push it to the next level, especially in its current state that it's not completely decentralized? You got to understand right now it's still in its infancy, and it needs a bit of manpower to get this thing going. Ultimately, I think the goal here, like every other DeFi project, is to limit the amount of involvement of the team and let this run as a very decentralized identity. And it helps with the fact that nobody can claim that it is a security. And that's a very important thing here going forward. We know that a lot of this has to do with regulation and so on. So what they're really trying to do here is create some sort of tax or some sort of way to earn a little bit off of every transaction in order to reinvest into the project itself. Now, is this governed by a DAO? I haven't seen any of this. It would have been nice to see a DAO mechanism that this capital, this tax gets put to some sort of pool, and then the pool gets governed by a DAO, and then everything gets voted, enhancing the decentralization aspect of things. Okay, so that's a very common feature that we've been seeing in the last little while, especially with projects that really want to iron out their identity as far as being a security, and a DAO is a good way to potentially add that layer of decentralization. So again, 4% transaction tax. Every transaction in or out, selling or buying, you're paying a 4%, and the team is going to be using that to push this to the next level. Not bad of a scenario overall. Transaction amount, where can I buy? You can buy on Uniswap, and again, generate revenue. There was minimum staking. The utility, what's it for? There was a good wording that I've seen here. I read this pretty much thoroughly, and I just don't remember exactly where I saw what is not QSD. Sorry. The investment thesis, investment strategy, why we use techniques. Yeah, you know what? Overall, this project is pretty good. I am very skeptical on bots. That's the reality. I'm very skeptical on bots or using AI as a trading tool. But guys, of course, we never thought about AI being as powerful as it is today. And sometimes we need to be forward thinking. We need to think outside the box and see where the value propositions lie. Because again, in speculation, you never know what the future brings. And you want to have some exposure to some of these key ideas going forward. Okay, so that's the overall white paper. Let's call it the Git book type of thing. I think it's viable, and it does adhere to some of the very, very interesting narratives in the last little while. Of course, AI, DeFi, and so on and so forth. There was one more thing right here. What is it used for? What does it do? It's basically AQTIS is used to power the quant tech. This is a good read, okay? And I think what I'm looking for is this. Our quant tech requires a database to help create and best strategies. So the database to basically create strategies. LSDs at the time, writing AQTIS database generates 1,500 signals daily. So trading signals. These database queries will be go live following the launch of the LSD. So in order to basically query this database, you basically need some AQTIS tokens. That's basically the whole concept here. Fueling tech launch. Okay, pretty good. At the end of the day, we got the whole gist of what it's trying to achieve here, and it's not bad. Okay, let's move on. Let's take a look at some of the metrics here. We have AQTIS. The price right now is 1.1 cents. Okay, it's been going up in the last little while since I've been doing this deep dive, but still within range, still within structure. The market cap is at about $22 million. So it's still very, very small. As you can see, $22 million, a small market cap. And you can see that it's still only listed on Uniswap, which means that we might see it listed on major exchanges or other mid-tier exchanges very soon, like MEXC or KuCoin, and the list goes on. Okay, so that's something to consider. We have fully diluted valuation, still very small, 33 million, but you have to understand that it's very close to the market cap, given the fact that there's approximately 67% of the tokens, for sure 65, but because it's still new, I think it's about 67% of the tokens in circulation. So that's why you get a fully diluted that is fairly close. Circulating supply is at about 2 billion tokens. As you do the math, quick math, so you can see 2 billion is the majority of them. Total supply is maxed out at 3 billion tokens. So overall, there's no real fear here that there's a complete rug pull as it was fair lunch, and you can see a lot of good stuff here. We're going to look at the Ethereum scanner. Let's see if we can do that real quick. Let's open this in a new tab and we'll look at the scanner. Overall, I like the Ethereum scanner. When I look at ERC20, any tokens for that matter, you want to know what the wallets are holding. And if you look at the holders, and you start looking at, what are the holders like, you have a 31.5% on TrustSwap, which is the rest of the tokens after the 67%, right? So really 67 and change. You have a couple of the other bags that hold a bit of the 10 for the liquidity pools and so on, for the liquidity for exchanges and so on. So this is good. 31% is in trust. So basically it's locked up and going to be released slowly, linearly. So not bad. And as for rewards, you can see the rest are pretty good. And if you look at the overall pie chart, no real concern here. This is the locked up token on the TrustSwap right here, and these are all little tiny accounts, and these are some other small accounts. And you have the Uniswap AQTIS. This is the liquidity for the Uniswap, and there's more going to be released little by little, linearly at the unlocks. Okay, so not bad. Overall, no real concern here for a rug pull or anything like that. Okay, back to here. And again, Uniswap only, and that's again an area of potential concern or also opportunity. Okay, guys, you guys know that I release a infographic that just summarized my overall feeling about this project. I think that it's a decent one. We know that ultimately AI is a hot narrative. We know that there's a couple good things here happening that are forward thinking. The ecosystem is pretty good. It's self-contained in the sense that there's nothing really built on it that is not proprietary to itself. In that case, it's a self-contained ecosystem. You have AQTIS, the utility token. You got the QETH, which is pegged to Ethereum, and you also have the stablecoin that again, I'm assuming that it is the stablecoin, and it should be a bullish thing. But again, I would like a little bit of a confirmation on that. But it looks like it is a stablecoin, which a lot of DeFi projects have. Utility 10 out of 10. AQTIS tokens are used to curate the custom-built database that monitors markets and provides trade signals, and creating a perpetual need for AQTIS inside the ecosystem. So that's the point. The utility is the AQTIS can be used to access trading signals that is gathered using AI. Guys, this could be where it's at, right? This is the thing. If you're bullish on this and you like and you believe in AI and its future, this is not bad. The roadmap is clear milestones available on the GitHub, Gitbook. I wish it was available on the website, but that's my take on website design and what it needs to offer. But ultimately, the roadmap is decent. The team, unfortunately, it is strong based on what is said there. On the website, there is a whole section on the website with regards to the team. However, none of it is doxed. None of this is completely doxed, so we don't know, in fact, if it's how much of it is true or not. Now, I'm not saying that they're lying or anything, but a completely doxed team has no problem showing us where they've worked, their experience, their history, and so on. And they do have some AMAs out there on social, so feel free to check them out regardless. Okay, so pretty good stuff overall. Their socials, unfortunately, not doing so well. Their followers, they have 6,000 followers. Their followers for the last 30 days have been down 44%, and they only have 12x posts in the last 30 days, and they're down 47%. Though they've been cooling off in the social realm, and their Discord dead in the water. I went there to ask them questions. I got some feedback, but ultimately, I expect action. I expect somebody there from the team. I know marketing dollars are expensive. I get it, and based on the fact that they're a fully fair launch with not much of a budget happening, I understand what they're trying to achieve marketing wise. Slow grind to the upside with no hype, just letting the product and the service speak for itself. Guys, that's a smart thing, but ultimately when it comes to socials, you need a bit of hype to get the market interested, and this is what it's lacking right now, very much so. Okay, so that's my take. Needs a bit of help there on socials. Tokenomics, 9 out of 10, very clear, fair launch type of deal. We talked about this already. LSD liquidity rewards 25%, so if you hold your tokens in the liquid pools, you have some rewards there. Public launch, 65% already in distribution, and linear vesting after LSD launch, so we're going to start to see 12 month linear vesting, a lot of these being unlocked and so on, and within the next year and the upcoming year. Protocol liquidity for protocols like a Uniswap is also available there for us traders that want the liquidity to buy and sell for volume, because this thing doesn't have much volume, tradable volume, and which is an unfortunate thing, but it's expected given the fact that it's only available on one exchange, and that is Uniswap. I like the Oasis a partnership / relationship that they have going on. I don't know if it's a complete partnership or not, but it definitely is a relationship, and they utilize the Oasis privacy layer in order to add to their value proposition, and I like this value proposition. Okay, privacy is an important one, and for me, that's a good start, definitely a good start. Let's look at some of this coin info again. The only thing that we can add to this is their volume, their trading volume. It's only it's under 1%, and for me, I look for at least about 5 to 10%, around there. 10% is actually my go-to. 5% I'm interested, I'll dabble in, because then you know that there's liquidity, you know that there's market participation, you're buying and selling, and that's what you kind of want and as a trader. But obviously if you're accumulating and looking for speculation for long-term holds, it doesn't really matter, right? You're just buying and holding for the up and coming bull run. We just gotta keep our fingers crossed that when it reaches its peak, and if it does very well, that we're able to get liquid again. We want to get back into USDT. We want to get back into stables as quick as possible, so that we can obviously protect our gains. That's the whole scenario here. Okay, so overall, not bad. Still very young. Fully diluted is very small, and the overall market cap is tiny. So we know that there's a lot of potential growth here, given the fact that it's not even listed on any major exchanges yet. So let's look at my verdict here. It's built on Ethereum. Yeah, there's a little bit of an issue here because we got transaction fees that could be a little bit high just to get your feet wet, but we have to understand that Ethereum at the end of the day is still one of the most stable and the most secure ecosystems, networks, largest networks out there. So you get what you pay for, kind of thing. I know a lot of people are very unhappy with Ethereum's progress due to gas fees, but again, you get what you pay for. You're willing to pay the gas because Ethereum at the end of the day, let's put it that way, is still the heavyweight of all the altcoins, right? Of all the ecosystems out there. Part of the DeFi, AI, LSD narrative, so all very hot narratives. DeFi is coming up with its own value proposition, and what it really wants to do is bring very controlled or exclusive financial instruments to mainstream society. And I've seen other projects do that, like Kujira, that's one of their main value propositions, bringing in financial instruments that no one can really get access to unless you're a whale or you have some sort of connections or whatever the case is to the mainstream. So that is a really hot idea. I think that's a good one. It's an easy sell, and especially with DeFi and privacy coupled into there, I think it's a good one. Trading liquidity concerns only on Uni, we talked about that. I'm not going to press that even further. Exclusive financial instruments, we talked about that. More offer on building community, effort. They need a little bit more effort on the community side. We talked about that as well. Achieving complete decentralization by relying on AI. I don't know if I like that whole idea. I think the AI is they're gonna put a lot of we're going to give a lot of credit to the AI to make a lot of the decisions here on trading. Like, I don't know if that's going to be someone that's been trading for a good amount of years. For me, I can't see any, or I've seen many bots and artificial intelligent type of platforms out there, and they've never worked out. So, you know, never say never. It could be different this time. I don't know, but we are in speculation. That's the reality. All of this is in speculation. It could make it big. It could be the first. It could be a great idea. Tax is 4%. A lot of people frown upon whenever they see tax. Of course, tax in direct association has a negative connotation, but at the end of the day, a 4% transaction fee, let's put it that way, that allows them to basically earn a little bit off of every transaction in order to reinvest into the project and make this thing, you know, run. There needs some sort of liquidity to make this thing run, and that's what they're hunting for, is that 4%. Guys, it's absolutely normal. It's absolutely fine. There are other ways, strategies that projects use in order to, you know, get some liquidity back to fund the project. But here, it's very transparent, a 4% tax. I'd rather have transparency and honesty than other, you know, gimmicky type of scenarios. So not bad of an overall, you know, strategy. Uses Oasis privacy layer. We talked about that. That's a good thing. Token holders, distribution data is good. No ambiguity. No, you know, everything is clear. No sign of rug pull. Nothing like that. Okay, so overall, you can see that it's pretty good. Overall, very clear. I didn't expect such a positive deep dive, but nonetheless, this is where we're at. What do I think this thing can go to? Because you know how very you know, I try to keep myself in the realm of reality, okay? Like, we can say this thing can do 1,000x, 1,000,000x, who knows how many X's. But the reality is, we know that we have Kujira to deal with. Kujira is another DeFi platform on Osmosis and Cosmo. And, you know, it does well. It's doing well. And it has a similar vibe. Now, Kuji, as of yet, I didn't really read that it's empowering the AI narrative or bringing in AI, and it may as well. Like, it could. Why not? All it needs is a good partnership with an AI project and bring that in, right, to its ecosystem. So I still feel like Kuji is a good competitor, someone to really look at and say, look, if you know, AQTIS can meet up and even catch up to Kuji, you're looking at a 27x, and that's an easy target, in my opinion. Why not? Kuji's not even that big, and it is great, but it's not even that big, and not even from the biggest ecosystem either. It's a hot one, but not even the biggest. So we got to understand what it's trying to do. And Kuji still, one of its value proposition is to bring exclusive financial instruments to mainstream society. So you can see that they're doing a very similar thing. The only thing that AQTIS is bringing is AI to the table and front, run, and center. You know what I mean? That's the thing. So AQTIS with a market cap of, what about Lido? Another project that offers the LSDs, the liquid stake token derivatives. So for me, this is another thing. You know, the whole LSD concept kind of bothers me. I'm not really keen on it. It sounds like a collateralized liquidity. You provide liquidity and it gives you tokens, and it uses the other one as your locked tokens as collateral. How do they manage that? Is there a liquidation point? Is there, like, you know, there's a lot of ambiguity there for me, and I focus on trading. I'm not really into this type of thing, but nonetheless, if it can meet up with Lido, if it can actually get there to that level, it can go up easy 100x. Why not? And it could easily get to $1. So what I'm trying to say here is, I know it's good to be positive, but let's be modest. If it could get to $1, guys, this thing did a great run, and I would be getting defensive in this bull run. I would be getting defensive at $1. Nice psychological round number. It's very likely it gets there, but obviously we're going to have to wait for momentum. We're going to have to see exactly what's happening there. We will not exit completely. We'll trail up stop losses. We'll take a bit of profits off the top as it reaches very overbought conditions on larger time frames, and we'll wait to see where this bull run hits. But at $1, that's where I'm going to start entertaining the idea of getting defensive here. So I give this project a rating out of 9 out of 10. It's a rare rating because ultimately everything kind of went well, and the only things that it did really flop on a little bit, it doesn't really matter at the current moment. It's still very, very young. The socials still need to grow. We got to understand that the exchanges are still very young. So of course it's a small project. It's going to get listed one day if it continues to do well. The team undoxed, so that's an unfortunate thing, but it's very common in new young projects like these, and the rest of it is pretty high. So we're doing pretty good here. I think overall this is a decent project. All right, guys, let's talk about charts. I know you're here to talk about price action. Let's take a look at what this project has been doing in the last little while. You can see that it did run up a little bit. It did break out of this sideways consolidation and left a fat volume gap right below. Now that's my concern. You know, part of my strategy is looking at where market sentiment is at, and we can see a big level of weakness right below the current consolidation. What should we be doing about it? Can we put a stop loss and protect ourselves? Definitely. All right, so let's look at this in a little bit more detail. We can see that we can put a horizontal right here very clearly. We got previous highs, we got some highs, we got a clear volume gap right above that, you know, kind of, you know, diminishes right around this level. This is where I see the majority of the weakness on this chart. If we fall through this gap and we fall through the top there, we can definitely come right back down to 0.0035 cents, give or take. And for me, that would be both areas, the top and the bottom of the volume gap, are perfect DCA opportunities. The problem is that we are currently in a consolidation with a double bottom. And is this a potential DCA opportunity? And I would say, why not? Why do you have to limit yourself anyway, right? You know, you're not buying absolute tops. You're kind of getting yourself into a little bit of a retracement, or at least an accumulation range. And how do we know that this is an accumulation range? Guys, look at the volume. Okay, so what we want to do quickly, and I'm just gonna, you know, scribble up here a little bit of this price action so we can make a correlation with between volume and price action, which is an important thing. Let's kind of use this. Look at this cluster of volume, supply and demand, right into here. Okay, and then cross-reference it with this. Okay, look at the history. Nothing. All up into here, got a nice spike, consolidation, accumulation, lots of volume, lots of market participation in here. Now, what does this mean? Is this a level of which we should be accumulating for a bounce? Why not? The reality is we have built the point of control here. Big picture point of control here. Let's get into the daily quickly, because it kind of consolidates a lot of the mess, a lot of the noise in between. Okay, and you can see that there's a lot of price action here, to the point that we've built a point of control here at about 1 cent, which is decent. Yes, we fell below it a couple of times and we formed a bit of a bottom, so I have no choice but to identify this as an invalidation of a bullish thesis. If we break below, we're making a lower low. The next level to watch out for is this green arrow. Now we do have a bit of a volume gap as well, which means that we could come down to about 0.0089 blah blah blah, all in this level, to buy the dip as well. And this is the issue when you have a diagonal support or resistance or a choppy price action, because you don't have much clarity. The only thing that I have with clarity is this volume gap. Okay, this volume gap right here is clear. If we break below this level, we're coming down to about 0.003 cents. If we break below 0.008, we're coming down. It's very, very likely. Now on the daily, you can see that the 200 daily EMA, which is a big part of my strategy, just to identify trend and where we could get support as the price action unfolds and continues going sideways. We can see this 200 daily do one of these, and we've seen this in the past. It basically flatlines over time. Okay, actually, let's do this again if I can do this properly. I'm no artist, but we'll do our best. Okay, so we'll kind of flatline a little bit. Okay, so once it reaches this level, we might see the price action do one of these. We could even see it come down to about here, maybe get support. You got to understand, the bulls themselves kind of want the price action, especially once this continues going sideways and the 200 daily creeps up and gets closer. They're going to say, you know what, the bulls are going to say, you know what, let the price fall to that level and give me the confirmation that we're going to use the 200 daily as support. Then they will get that confirmation and you'll see that the bulls will get in hard. The 200 daily acts like a magnet. It pulls the price towards it and also pushes the price away from it when it's too close. And you can see that in the past. This price action right here doesn't have enough data to suggest it. But if you backtest this idea and this concept, you will see that the 200 daily is like a magnet. Okay, so what I'm expecting is that worst case scenario that we do roll over, we do hit this level again at 0.008. There is a level that we are currently at testing, double bottom twice. You know, here we got more price action in, here we got a wick with a quick reaction. Is it a slightly higher low? It could be considered that, and we do have that point of control. So what am I going to say here is, guys, DCA right now, it's not bad of a scenario. I wouldn't be betting the farm. I would be getting heavier as we come down. Now, getting some skin in the game is here not bad, because I do see that the bulls are going to be looking at this as a continuation pattern, a bull flag. Let's look at this momentum. You can see that we're getting a bit of divergence on the MACD, not a lot, but as you see that not even, there is none. And I retract that statement. You can see that the price action excluding wicks are making a higher low as we speak. Okay, very clearly higher low. Let me get that in here for you guys. We got the bottoms right here, only bodies, no wicks, upward sloping price action. And if you look at the momentum, the histogram bars, it is also upward sloping. So no divergence, no sign of divergence. The EMAs are facing down here on the MACD. Histograms are still red, so it means that, and we're in the bearish control zone. So it could be that we get still a little bit more negative pressure to the downside. And if you look at the daily's in the chop zone on the RSI, still sideways in the 50% mark, which means that we could hesitate here for the next little while as well. And guess what, guys? What about if we get oversold? What about if we come back to oversold conditions and we see the price fall? So that's the risk you take going into a long position right now. So what I would say is, since there is risk, if you're going to DCA right now, get in with a small bag, just in case it does get oversold. Now, we do see a bit of a trend, 1 touch, 2 touch, 3 touch. If we get 3 touches, we might come back up, get a lower high on the RSI, get that confirmation that we're rolling over, and that might, even that pop on the RSI, might even give us still a higher high. This wick is quite aggressive. It does look like a blow off top type of scenario. Let's look at this on the weekly. You can see that wick on the weekly looks like a blow off top, and it does look quite weak here on the weekly as well. The RSI looks like it wants to roll over, and so does the MACD, starting to look like a bit of weakness. If we get that EMA cross on the weekly, this thing could definitely come down even right through this volume gap and come all the way down here. So you can see that there's a bit of negativity throughout this price chart, and ultimately I am not prepared to become exit liquidity here on this potential top. So DCA a little bit, get in heavier here, and get in absolutely heavier down here if it has to happen. Now let's go down to the 4 hour again, and you can see that we ultimately did get oversold here on the 4 hours, which means that we could anticipate a short-term bounce that could turn into a nice rally or breakout or invalidation of any bearish sentiment here. We've seen a lot of the altcoins do that. So what I would do is, if you're going to get in right now, you have to put a stop loss somewhere where you're going to cut yourself off. You can cut yourself off here on this double bottom, and just understand that if it falls below and it gets to the next volume gap where it could get support, it's about a 15 to 16% dip. That's a pretty big one. But if you get in with a small bag, it's not that bad. Like, for example, if you get in with $100 and it falls 16%, all you really did lose is $16. It's not a big deal. But if, as you add bigger bags, as you expose yourself more to the asset, you're going to expect that obviously every dip is going to be a lot heavier, and it might not be within your risk profile, right? So you got to identify what type of losses you're okay with to hold and endure while this thing retraces, right? So then ultimately, if it breaks below this, guys, all the way straight down. Now you could put a stop loss underneath here, which makes you have to endure a little bit more of a dip, and as it comes to the green arrow, to buy the dip as well and put the stop loss underneath here. That way you can drag your average cost a little bit lower and accumulate within this range, hoping that we get support on this green arrow. Now, what I would like to do is see ultimately that this 4 hour get this bounce. You can see that it got oversold. That's, for me, is a concern for a potential viable bullish thesis here. We're coming down to oversold conditions. We see a bit of divergence happening as we speak. Let's zoom in a little bit here on the 4 hour, which means that we could get a short-term bounce to the upside. And I'll show you exactly what I would be doing here if I were to get into a long position. You can see downward sloping price action. We see the momentum in the exact same area is moving upwards, which means that we're getting that pivot point, and the MACD is giving you the same confirmation here on the 4 hour. So for a 4 hour move, it's not a bad entry to put a stop loss right underneath these lows and expect a continuation to the upside, where do we start getting defensive? At range highs. The reality is we got range highs. I would get defensive right around the zone on this trade. If I were to get in at this level, I would get defensive right here. And you're looking at a potential pop to the upside that would get you approximately 35%. But I wouldn't exit my entire position. What I would do at that level is take a bit off the top and trail up the stop loss right under the 200 EMA on the 4-hour, right around this level. And that way, if it does decide to break out and get another level up, given the fact that I know a lot of the bulls are looking at this as a potential bull flag, a continuation pattern to the upside, what about if we make another leg? Let's look at what happens here. If you look at this extension, that when we broke out, more or less eyeballing it, and we do another extension, we could definitely get a little higher, right? I would even argue that we can use Fibonacci extension levels. Let's do that. Let's see if I can find my fibs. Let's do it right here. Why not? Or even here, let's do the swing high to the swing low, more or less. It doesn't have to be that accurate. 1.27, 1.618. Why not? Right? It could happen. We're in price discovery, look left, there's no price action looking left. We've seen a lot of projects do this. So what I would be doing is, if you're going to get into a long and you're bullish on this project, get into a long right now, put a stop loss underneath here, let it run. If it runs, get defensive right at the golden pocket at about this level right here. Let me put a horizontal. This would be the concerning point for me. And I would put a red arrow there for this potential scenario, and then start looking at extension levels, of course, after it breaks out, and get defensive along the way. No, this is not a good one. You know what? Let me do this better. Right? Yeah, golden pocket, of course. You know, these wicks have very, very low volume, and they're likely not to hold up. So I don't put faith in wicks. They could react, but it's all about probability, right, guys? So here, 1.27, these are areas of concern for me where I would get defensive again. And absolutely for sure, the golden pocket extension level is somewhere that, you know, a lot of the magic happens. This is where a lot of people take profits. So be careful here, right around this zone. This is what I would be looking at, especially if the 4-hour is overbought. Once the 4-hour is overbought, you start to get defensive, look for exit strategy. And this is basically what I would be doing for a short-term bounce to the upside based on the 4-hour. But the daily, guys, just keep in mind that the daily and the weekly might be looking for oversold conditions that could come down here. So be careful, because you're trading against the bigger trend, but still a very viable scenario to see another impulsive move to the upside, and validating all the bearishness that we can see here on the daily and on the weekly. Guys, if I've offered you any value in this video, do the channel a massive favor and slap the like button. I'm going to be live tonight at 7:30 Eastern, where we can talk about crypto news and price action. If you have any projects you want me to cover, that is a great time and place to make those requests, and I'll definitely put your requests in top priority. Take care, guys. Have a good one. And don't forget, buy the dip.